Sandeep Bhatia joins us. He represents Kotak Institutional Equities. Sandeep, fantastic to have you back. Thank you for joining us. Sandeep, whichever way I cut and dissect, there is only bad news. Do you think there is too much of pessimism in the system and it is time to be a contra buyer and it is time to put money to work?
No, I think we still have some way to go down. I don't think there is any quick turnaround of the fundamental macroeconomic challenges that we face today. I think whatever the government has tried to do since last August is essentially about trying to show that there's someone in control, that someone is looking at the problems, but the solution of these problems, whether it's the supply of fuel, coal, the widening current account deficit, the inability to have a conducive environment to promote investment, is not going to go away in a hurry. The only thing that has been holding up growth in India has been the buoyant consumption. That's what is taking us through, but I doubt that can take us anywhere above 6%. I would be surprised if we reach 6% this year in terms of GDP growth. We should thank our stars that we at least have global liquidity coming through for the last 2 years, which has held us up. Otherwise, we would be in a worse shape. So going forward, I think this market at best is in a trading range, and right now it can still fall further.
Sandeep, what according to you, though, the base would be for that trading range? Do you think we could further sink to 5,100 sort of levels, or do you think 5,400 and the market fall would be arrested?
I think 5,400 is what I would put the number at right now. There is clearly a lot of moving parts here. I don't think anyone would have said the kind of currency fall that we witnessed in the last 2 weeks was expected by anyone even a month ago. So clearly there are pressures, and we have to remember that over the next 2 years we will see a gradual easing of quantitative easing that has happened. So we'll see a reversal of that. And this is definitely going to raise US Treasury yields. The opinion is that from the current 2% and odd, we will see them rising to 4%. So the gap between Indian GOI debt and US Treasury yields will definitely narrow. Therefore, there could be significantly further outflows from Indian debt, while the the eyes have all been focused on Indian equity inflows from foreigners. There's definitely this working in the background that debt outflows will start turning negative, especially if global interest rates start moving up. So to cut a long story short, I think flows, India remains hostage to global flows, and that can change definitely in the next 2 years, and therefore both the markets, asset prices, equity markets and currencies could remain under pressure as long as we don't have a strong government and belief that things will change.
Well, Tata Coffee is really bouncing back. 1,092 for Tata Coffee now, but Tata Coffee in last 2 days also had taken a hit of 25% plus. Mahindra & Mahindra Finance is off to a good start. That was the great call from Ashwini. He alluded to that stock just before the open. 250 rupees approximately for Mahindra & Mahindra Financials. Sandeep, so are you really worried about the FI data? Because foreign institutional investors, they've not only stopped buying, they've started selling, and in last 4 days they have been net sellers in the cash market to the tune of about 2,000 crore. This is a big number.
Well, definitely, as I've said, we are hostage to foreign inflows, and if we see a sustained month or 2 month kind of outflows, then definitely the pressure on the markets builds up heavily. Right now, I think it's best to remain cautious, monitor how the flows are growing. I don't think there is any respite coming on the economy front or corporate earnings front. The only thing that we can hope for is a good monsoon, and that would put some pressure on food inflation. Other than the fact that the monsoon plays out well, I think in the near term that's the only factor that can improve economy. Beginning of debt outflows from India with lower rates. So that's where we are. We have little policy momentum and we have little options right now.
Sandeep, what have you made of the new norms by the RBI, which has really been punishing a whole host of these jewellery companies, Titan being one such case in point?
Well, I think these are measures to stem the rupee slide and to control the current account deficit. And I think anyone who was looking at the current account deficit balloon over the last 2 years would have seen that coming. Clearly, it's difficult for the businesses that import gold or other businesses that are driven by imported raw materials. But that's a fact of life of doing business in India. We are an economy which doesn't export enough. Structurally, we have not invested. And, there's not much that the world wants which is made in India. So clearly, if you run that kind of a macroeconomic situation, you will get into the trouble that we are in.
Sandeep, you are clearly painting a bleak picture. But if your outlook on India is bearish, why do you expect that Nifty will not crack below 5400? Because according to your assessment, things have really gone wrong, and things have really gone wrong. Then Nifty could even go below 5000 or even could go back to 4800.
So, the basic issue, as I've said clearly, is that in the beginning that there would be a reversal of quantitative easing, and that would take probably over the next 2 to 3 years. I don't expect any, rapid, reversal of quantitative easing. I don't think any of the Western economies can afford that. So as long as, flows are there, we will definitely maintain that range. Anything below 5,000, there's definitely value in this market. So that itself puts a floor to this market. I don't want to sound alarmist. The fact is that we are in a difficult situation entirely of our own making. And we just have to hope that the flows remain broadly where they are, so that we don't crack further. At anything around 5,100, 5,000, definitely value emerges in this market, and therefore that's a good level of support.
Sandeep, what did you make of the salary hikes granted to Infy as well as Wipro employees? Is it a sign of things looking up in the future quarters ahead because of the rupee depreciation, or do you think this is just a one-off move?
I think it is a combination of various factors that have resulted in this. I think primarily it is also designed as a morale boost. We have seen the reinstatement of Mr. Murthy at helm of affairs, and I think this is something which is designed to make the rank and file feel good about coming to work. And on top of that, of course, there's been the buffer of a falling rupee, so that will help them offset this kind of a hike. So I would think it's partly an HR move and partly the fact that the rupee has given them some breathing space. So it shouldn't be hurting them financially too much.
And also, I guess they are now desperately trying to retain talent because the attrition rates at Infosys have been rather alarming, and they've really not managed to attract much of talent in last 2-3 years because the bench rates are also one of the highest in the system. So Sandeep, within the IT space, how are you leaning? One side you've got growth, which is TCS and HCL Tech, but growth is coming at a price. Other side you've got value, which is Infosys and Wipro.
Now, overall, we have been cautious on the IT space. So that is the underlying view that we have. Within that, we like TCS. That has shown time and again the ability to drive both combination of stronger than industry volume growth and still maintain margins. So I would think TCS remains part of everyone's core portfolio. I think the dark horse in this race is clearly Infosys. I think people are building a lot into Mr. Murthy's return to the company. I think the market is in the mood to give this a benefit of doubt. So let's wait and see. We will know how things play out in the next 18 months or so. Really to see how fundamental performance changes. So I wish Infosys good luck in this journey. And clearly, I think I think Infosys from here on also looks interesting in the stock market perspective, because I think the market is willing to back the change in the change in management which has happened.
Sandeep, what about Apollo Tyres as well as Sun Pharma? Different news, but not auguring well for both these names. Are these closed chapters, or would you at all look at buying these two names because of the deep falls that we've seen in the names?
I think right now, let's wait for events to play out. So right now, I would, be cautious on those names.
Sandeep, how exactly are you approaching the consumer space now? Because street is divided on how to approach consumers. Some are approaching consumer stock via banks, some are buying expensive FMCG names, and some are even buying the niche consumer names. What is your stand there?
As far as consumer staples are concerned, I think valuations are stretched. Everyone knows that. This has become, the default, safe haven kind of investment asset class in India. It's something which is like going to the US Treasury. So right now, I think people will not exit this sector in a hurry. But clearly, if there is any change or improvement in economic fundamentals, then this sector will start underperforming. I would think that remain invested in this sector, clearly because I don't believe anything's changing in a hurry. Valuations remains high, but at least you will probably protect capital here.
So at the current juncture, what is a high risk, high return idea where the volatility could be 15%, the downside could be 10% in the short term, maybe in the medium term, but that stock has potential to add 50% in next 3 years?
I think Tata Motors, is a very good candidate in terms of delivering strong growth. We have seen the domestic business, which has been very weak for some time. I think it will continue to be weak for this year. But on the flip side, we have new pipeline of models coming up in JLR. That business has seen very top end a new launch in Range Rover last year. This year we saw them launch Range Rover Sport, which is one notch below Range Rover. These are premium cars, and they're doing very well across the globe. China has been a center for growth, but now actually growth for JLR is coming from the Western economies as we see recovery taking place in the US and Europe. So I think that's one name where we can easily see good returns in the next 3 years on the back of strong new product introductions which are happening for JLR, and the fact that somewhere in the next 3 years the domestic business will also start looking up.
Anything from the non-50 Nifty 50 basket which excites you? Anything from the mid-cap space?
I think Glenmark Pharma is an interesting name. We see at least a compound growth of 18 to 20% in terms of earnings. The stock is well positioned in its international business. It's in fact one of the fastest growing businesses in India. So that's one good quality pharma stock outside the large names.
Worry about Glenmark's exposure to R&D, because R&D income of late has been very volatile. Unlike other pharma companies which are growing in a linear manner, there is some degree of volatility in Glenmark's numbers.
Yes, research income is by its very definition going to be volatile, and our valuation takes that just as one-off income. So I don't think we should assign that as recurring income, because the predictability of that is very poor. Be that as may be, the underlying business both in US, in Latin America and in India is growing faster than market, and that's a business which will also see margin expansion with the fall in rupee.